All right, Simon, our favorite person is back. Sebastian and Klarna have filed their F1. You want to dive in?
Let's do this. Yeah, Klarna has been in the headlines for a lot lately, but they finally filed. And apparently they've scooped Walmart as a client right under the nose from Affirm the week before they list. So this is going to be a fascinating one to watch. Who gets to be the main character? Is it going to be Affirm and Max Levchin, or is it Seb and Klarna? What do you think?
I think it's a really interesting question. We're going to unpack that today. I thought it'd be helpful first just to give some stats about both of the businesses, and I think we can dive into like why maybe Affirm versus Klarna has the opportunity to take center stage. Although I would say Klarna right now, they're winning at the PR game across a couple different dimensions. But you want to dive into some stats real quick?
Let's do it. Let's do the stats, man.
All right, so little refresher for folks. Klarna is the global player, started in Sweden. UK is the biggest market. Their GMV is much larger than Affirm, 105 billion versus just over 30 billion. But something to keep in mind is that Klarna's offering is very different from Affirm's. 80% of their GMV is basically pay in 30 days, so a pretty simple product. Whereas if you look at Affirm, they actually are doing bigger, more complex underwritings, pay in 4, pay up to like I think 6 months or some of their longer duration products. So you're like, maybe buying an 8 Sleep or a Peloton, whereas for Klarna, you could be buying a $100, purchase item off of, now Walmart and just be like, oh, I'll pay for that in 30 days. So that's the big one is higher GMV for Klarna, more global, but smaller purchases. And then, as you might expect from that, Klarna actually has many, many more active users. So they cite having 98 million active users versus about 21 million for Affirm. Now, might not be apples to apples how each company defines it. That's up to them. And then related to that, the simple product has a lower take rate. It's about 2.7%, whereas for Affirm, it's about an 8.9%. Klarna has not listed yet. We don't know where to price. I think also a good point to say nothing in this is investment advice. Affirm is trading at about a $15 billion market cap. If you boil it all the way down to top line for revenue, they're basically in pretty similar spots, even though GMVs are different. The take rates pull it out to a similar kind of, I think it's 2.5 billion or so. And so that's where we are. And the one other thing I'll pull out is that at least on paper, Klarna has eked out a small little bit of profit, whereas Affirm is targeting being profitable. But what's your, talk about Klarna's market genius, what's your pushback on the small bit of profit they've managed to pull out?
So I don't know if you noticed they sold their checkout business. And that checkout business, so that one-off item got them a lot closer to profitability than they'd been before. So they always said they wanted to be profitable when they went public, and that was just a very good time to sell that business. Another stat that sticks out is revenue growth. Klarna's in the mid-20s at 24%, but Affirm had a really good year all the way up at 46%. And so these are meaningfully different looking businesses once you do the tail of the tape the way you've done. But then consider as well, their cost of funds looks quite different. Klarna in a lot of its markets is a bank, so it's able to take deposits. So it's can afford to have a lower take rate and do sort of different term of lending because it isn't having to fund its lending in quite the expensive rate that somebody like an Affirm is. So really meaningfully different businesses in meaningfully different ways. But these two companies now are, when you think BNPL, these are the two names that come up. Look, Afterpay was sold to Cash App. PayPal is a lot more than BNPL. Sezzle and Zip are in the conversation, but they're niche players. So who gets to be main character, and is BNPL what they are forever, or what are the prognoses for a company like this in 3-6 months time?
Yeah, and I think one thing you and I were talking about earlier is if you want to become the massive dominant player in this category, what's the better place to start? Is it to be the company that has 93 million active users, that is doing smaller value, less complex underwriting and starting to roll out a card? Or is it someone who's like mostly focused on the US, although Affirm has UK and other places, and is doing these more complex underwriting products? So like, where do you think is the better place to be starting to build like an enduring set of customer relationships?
Well, as you alluded to, they both have debit cards that let you split a payment, and both of those debit cards are now starting to gain some traction. And Klarna, in Europe at least, offers a savings account, and it offers the ability to store cashback inside of that account. They also do like an open banking, account aggregation, budgeting tool. So they're looking a lot more like a neobank at this point, versus Affirm, who might be heading that way. I think ultimately they both kind of wanted to become that. And so if you want to become a neobank, if you want to start cross-selling lots of things, surely it's a good thing to have lots of customers using you on a regular basis. That gives you kind of an excuse. But then, there's no downside in being a wealth manager or a wealth bank. Like if a firm is higher up the income brackets, they could have less customers and still be more profitable and do more revenue. So neither of these things are the wrong place to start. But I just wonder if kind of that activity, that everyday use, that head start for Klarna gives them an ability to cross-sell. 15 years into its life, 20 years into its existence, this company has done a debit card and a few products. It doesn't actually have a lot of financial products. And it shows up everywhere else. Like Klarna is available inside of Apple Pay. So are they going to become the wallet of the future, or are they the BNPL button? And I wonder how much they're defined by that.
And this is why I feel like fintech is still so young. Like these are both, call it 15-ish-year-old companies. And certainly for Affirm, they never wanted to be a BNPL provider. The term didn't even exist. They wanted to be like a holistic financial services provider and use lending as a wedge. And then it turned out that wedge was so big and so successful that they became a BNPL provider. But today, if you look at them, if you dig through some of their public filings, you can see that their debit card usage as a percentage of GMV in the last little over 12 months has gone from about 2% to 10%. They also have repeat purchasers who are using the Affirm app to go and find, other items that they can purchase. So they're trying to be a little bit more of a marketplace. At one point in time, that drove up to 25% of purchases across Affirm. And so both of these companies want to get the repeat engagement, maybe even have subscription in the case of Klarna. But that story, I think that's the story I'm most interested in, but it's still the earliest.
Yes.
Klarna Plus, they announced June 2024. Then they said we have 100,000 Klarna Plus members. I haven't seen the latest stats there, but that's what I'm interested in is like, can you really, if you can get people to start paying a subscription or to have all this repeat usage, then you're not just a button, you're an actual like ecosystem. You own a huge amount of consumer mindshare.
Well, and it's important to say that like the classic merchant sales pitch has been proven, right? Which is if you as a merchant put this button on the homepage, then you're going to get a higher order value, you're going to get a higher conversion, and you're going to get repeat customers. But the magic is you're also going to get new customers, and that comes back to the shopping ecosystem. And both of these companies have been really good at that shopping, loyalty, activation, rewards ecosystem thing. So if they're going to break out of being a button, the only place they've really done that is in the shopping ecosystem so far. But I do wonder, as you say, where else can they lead with it? And is their strategy almost pulling them in an opposite direction? Because the BNPL has been too successful. Like you become known for a thing. They literally created a category. We're arguing if they're the main character of that category, and they want to be something else when they grow up.
Yeah, and it is definitely worth pointing out they have been very successful in building a whole category that people didn't think was a thing that you could necessarily do. And one of the most interesting things they've done, versus credit cards, merchants have been brought in as true like first-party partners into the ecosystem because merchants fund those rewards or the pay in 30 or they eat the cost of the interest in the case of these more expensive purchases. And so that's something net new that both have done. I think Klarna has a network of over 400,000, maybe it's even over 500,000 merchants. Affirm's number is smaller because they're just US. But bringing merchants into that conversation between consumers to drive rewards is super interesting because the card networks don't really do that, right? The merchants hate the networks because they're forced to pay interchange and they don't necessarily have a lot of control about how that interchange is being used to fund rewards programs on the networks. Whereas if you're 8 Sleep, you're working with Affirm to figure out, okay, what is the offer that drives the highest AOV and conversion, and if both Affirm and you win when that nets out in a good way.
Yeah, that data flywheel side is such a superpower that these organizations have really cultivated, and it's often the thing that gets missed in those businesses, which is like the card networks are almost to merchants often the enemy. They are setting new rules. They're hard to deal with. They seem to be much more issuer focused, and there's always some sort of lawsuit with the big merchants suing Visa or MasterCard or both of them. Whereas in the Klarna and Affirm side, they have a very different relationship. That partnership thing that you mentioned is really just driving more sales. Like, who doesn't want more sales? Put this button on my homepage and I get more sales, and then maybe that customer becomes part of an ecosystem, and then comes back to me on a regular basis, and I can retarget them. I mean, that's the hardest thing to do when somebody comes in for a guest checkout and you've never seen this customer before. You don't know if they're risky or not. But then Klarna comes along, Affirm comes along, risk scores them, advances you the whole cash, so you've got very little risk. You send out the goods, but you've already got the cash in the bank. Yes, okay, you've had to discount it a little bit, but you are in a much better place. So when you take off the cost of risk, the cost of fraud, you still end up as a merchant with much higher revenues overall. And that data flywheel, I wonder how much that's driving some of their underwriting and how much it's driving what they're able to bring back to their merchant network. Nobody's ever... there's a lot of these closed loops that have done quite well. So, even Cash App has one now. PayPal's tried to do it a few times where, you sort of have the consumer on one side and then you have the merchants on the other side. The BNPL providers are sort of quietly already that. They're quietly already that data flywheel figure of eight that is hugely compelling. So, I don't know. This is a fascinating space.
Well, let's back up. We talked about which one is really defining the category and making the name. Let's just talk about on the PR front of things, Affirm versus Klarna. Who's doing better at this moment in time?
I mean, there's one winner, isn't it? It's Klarna. Whether it's Seb talking about they're going to adopt stablecoins or crypto, I think it was, or look how many people we've fired and then rehired because of AI, and then look at this is how we've actually done AI. Like, whatever they do, they seem to get attention. They are getting clicks. They're a headline writer's dream. But let's be honest. Max Levchin is no slouch here. If there is an earnings season, he's out in the mainstream media, and the guy pulls no punches. Like, he's pretty quiet, but he's a heavyweight. But I gotta give this one to the guys at Klarna. But what about as a lending business? Because this is a tough one, right? You've got somebody who's a bank versus potentially somebody who's more profitable on the lending basis. That's a tough one to call. What do you think about as a lending business versus maybe even a technology business?
Yeah, as a lending business, I think Affirm is doing the more interesting work. They have the harder underwriting problems to solve, but that's not necessarily a good thing. You don't want to solve hard problems. You want to solve the right problems that deliver the most value. Right now, it is delivering a lot of value for them because they have a much higher take rate. But if you can aggregate supply versus aggregate demand, I think usually aggregating demand matters more. And so Klarna has a larger customer base, although their U.S. equivalent customer base is likely smaller than Affirm's, but they have a simpler product that can drive more repeat engagement. So they have a chart in the F1 that says, for our card users, we're seeing annual purchases. We're seeing 151 annual purchases a year. So we're just driving a lot more repeat engagement. And sure, those are pretty simple transactions, but that sort of repeat engagement where you aggregate demand, you can start to build into more complex areas over time. And so as a lending business, I think Affirm has built a more interesting engine. But in terms of the repeat engagement that allows them to have access to consumers more often to position them with product, Klarna, in starting with a simpler product, has positioned themselves just to be in the flow and the awareness of the consumers more often.
Yeah, I think that kind of awareness thing is interesting. What about cost of funding or kind of like that potential to be a bank, do you think both of these things go for a charter, or do you think just one of them does? Is a firm ever going to bother with it? Do you think that's in the horizon for these guys?
Great question. I'm so glad you asked. I think it's too early to tell. And this is one of the questions I was trying to answer looking at the F1 was, okay, Klarna is a bank. They do have lower cost of funding because they can take deposits in Europe. They call it their cost of funding as 3% in the F1. But if you look at their OpEx in whole, there's a lot of other expenses going on. And you compare that to Affirm, both of their OpExes are pretty similar in volumes. And even if you reduce the cost of funding a decent amount, it's not clear that's going to be a fundamental unlock for the business at this point in time, next 6 months, 12 months. What I'm really curious to see is what about the next 12, 24, 36 years down the road? If you start really aggregating deposits, if you can be more aggressive on pricing, if you can fight to do things at lower margin and therefore just win more deals with partners, you can deliver more value to consumers. Being that low-cost provider can be huge, and every little bit matters. And so I don't think it's driving anything right now. I don't think that Klarna has a fundamental advantage today because they are a bank, but I'm curious to see if it becomes the case in the future. I'll also say Affirm's not the low-cost provider here, right? We just talked about they have a higher take rate, more complex underwriting. And so they're a little bit less sensitive, I would argue, just because there's more margin to play around with. Whereas Klarna is more sensitive. And it can be really hard to compete with folks who are price leaders, right? Klarna just won their deal with Walmart, and I bet you Walmart negotiated pretty heavily on the terms that they got. And I bet you that's part of the reason, or a big part of the reason, why Klarna won.
Yeah, and that's the sting in the tail of that news, which is immediately when you see Walmart scooped by Klarna from Affirm, you think, wow. But then you sort of scratch beneath that and you think about the price sensitivity of a Walmart and you think, well, how did they get that deal? And is somebody like an Affirm willing to let it walk away? All right, last category I had in mind. What about product innovation? Because I think Affirm was one of the first to do the Visa Flex credential, but Klarna has a debit card that can do similar sorts of things to the Affirm debit card. They're both ending up in the wallets. They're both sort of showing up everywhere. Is there a product innovator leader here, or are they neck and neck?
That's a good question. I haven't used the international version of Klarna. They certainly do seem to have a lot more features than Affirm does across different categories, but I don't know the extent to which consumers are really engaged with those features. And so it's hard for me to break out and decide who has the more innovative product. I did download both apps again recently and play around with them, and it's not immediately obvious to me why one of them would just be a fundamentally better consumer product experience. I think that partially hints to that there's a lot about this business that today isn't just about the products. It's about a lot of just hard work on really subtle things to increase conversion through the checkout flow and doing underwriting super quickly, driving down your cost of funding, reducing customer support volumes. And so while we're talking about, it'd be great if they could become a consumer neobank in both cases, today that's not the thing that's driving most of their growth.
The battle is for the basis point increase in conversion by merchant. And one of the things Klarna did really well with some of the fast fashion brands in Europe in the early days was take a very consultative approach to increasing that conversion. So it wasn't just that the financial product will help you. It's also working on your checkout page and your flow and kind of really helping you think about where to present the Klarna experience and how to present it and what you need to be doing as a follow-up and the package that sits around that. So it's kind of almost that yes, the product brings you more sales, but we partner with you too to help you do that. And if there is a battle they have, it's for merchant mindshare in that space. And in fact, if you think about where a Stripe and an Adyen is selling, the game is conversion and basis points. And if you can win at that, then you win growth.
And I'm glad that they're going public because just having more companies where we have this level of detail as to what's going on, I think it allows the whole ecosystem to learn more. And so it's great to have another competitor out there in the public eye.
Heck yeah. So let's see who gets to be main character. Maybe we should do this one in 12 months and see if see if we still agree. I'm gonna edge it for Klarna right now, just on the PR side alone. Maybe not on the numbers. Sorry, Affirm folks, if you're reading or watching, even reading a YouTube video. That's a strange thing to do. But how about you? Who are you gonna give it to? Who's main character?
I mean, they have the main character energy. It'd be hard not to if you're the one doing the IPO and you're the new kid on the block. But let's see if all the hype lives up to it and where things go in another 12, 24 months from now.
Heck yeah, man.
Well, really good. This is going to be a fun one to track for sure. And I'll catch you next week.
And bye for now, sir.
Cheers.